now.
All right, everybody, what is up? And welcome back to week 2 of Finance Trivia with Perunga and Fridge Financials here. We have a great cast here today, me and Perunga. Perunga, how you doing, my friend? Ready for another trivia session?
Yes, doing well. Happy to be here. Happy Saturday. Thanks, Fridge.
Happy Saturday as well to you. And we got another great audience here to play part in Finance Trivia. Last week we didn't have one because I was just too exhausted from my actual job. But we are back and I'm excited for this again. It looks like we had a good turnout last time and we have a good turnout again this week. And if you are watching this on YouTube, feel free to join the Kingdom because then you get a part in these every week. Winner gets a free month in the Kingdom Discord, or if you already are getting free, you get a personal hug from myself or Perunga. So, if you want one of those, feel free to, right, Perunga?
Yeah, you can call me Ryan too. Either one doesn't matter. But yes,
Oh, do you know what it is? I realized that you changed your name on Discord, and I've never gotten used to it yet.
it's okay. Don't worry about it. No big deal. And it's okay that we took
um,
last week off.
Right. So we are going to get going here. And again, as people are going to join in, there's 20 questions, 20 seconds for each one, winner take all. And we shall see how it goes. And again, if you missed the first question, it's no big deal. As we are going to keep going here. Some people just logged out. But if you do log out, you can log
Yeah.
back in, no problem here. So don't feel like it's the end of the world here for everybody here. And we'll get going here. So good luck to everybody. We got 20 questions, 10 from Ryan, 10 from me. And let's see what you guys actually know.
Oh,
Starting
transfers.
off,
Okay.
yeah, just in time. So, Friends Trivia Week 2, first question that is on the board for all of us is, what is IV Crush? First question, and there's the 4 options. You have 20 seconds. Do you know what IV Crush is? Pick the correct answer to the best of your ability. Let's see how you do for the first question. I think I shuffled these. They should be shuffled, Ryan. I'm hoping so. If not, then it's
This
just gonna be
looks.
this weird
Yeah, I was
whatever.
gonna say this looks like the first one, so we'll see.
Yeah, right. And that is going to be the correct one. The extrinsic value of an options contract declines sharply. Ryan, since you put this question in, do you want to elaborate a little bit on IV Crush? I think you did a post about it on After Hours, if I'm not mistaken.
Yes, I did one a couple days ago. That's why I picked this question. Just basically is mostly it revolves around earnings, but there's other binary events, but implied volatility increases leading up to the event, then after the event occurs, implied volatility declines, which means the extrinsic value of the contract is going to decline also.
Absolutely lovely stuff. And let me tell you, I've gone through quite a bit of that with IV Crushes in my options I've played for earnings here. So it definitely happens really, I think frequently happens usually during earnings, right, Ryan, if I'm not mistaken?
That's the most
Usually it's the bigger one.
common, yeah, like occurrence. I'm sure there's more. I can't think of any off the top of my head.
Yeah, I feel like it's usually more of earnings because implied volatility is more of like you don't know what's going to happen after earnings. And then once the earnings come out, now it's known what happens. So then
Right.
they can price in the result of it, right? So that's where you get that IV crush essentially. So if you guys are joining in here, if you look at the bottom of my screen here, you will see the pin is still there at the bottom here. So 149252. Feel free to obviously you can always join back in when you need to. It is there for you. And even if you missed the first question, there's no big deal. There's still plenty more questions to go. One question will not make a difference. So moving on to question 2. What spread is considered defined risk? So we have short strangle, short straddle, butterfly, or jade lizard. Ryan, was this the second question or is this actually out of order?
I think this is
Do you
shuffled.
remember? Okay. Whew. They're really trying to throw me off by putting the first question first after I shuffle it. Like trying to
Yeah,
make it
yeah,
seem like
yeah,
I'm
yeah.
stupid over here.
Uh, uh, yeah.
Oh man. And the correct answer is butterfly. Now, I don't know much about these animals that Ryan trades here for selling options here. So Ryan, take it away. What is the butterfly?
Yeah, butterfly. I mean, you could do it several different ways. An iron butterfly would be selling an at the money call, selling an at the money put, and then buying a call and a put equidistant, buying the wings, they say. You can also do it with just puts and just calls, where you buy a closer to the at the money strike or in the money strike, and then sell two further away out of the money, and then buy another one out of the money. It's hard to say without showing a picture, but it's defined risk because you either receive a credit up front and you know what your max loss is, or you pay a debit up front.
Gotcha. Yeah, because when you're short, I know that when you're shorting, when you have like short strangles or short straddles, you're usually saying that like, hey, like it won't go to this price here, but that risks you getting assigned. If you have a risk of assignment, then you have a risk of even losing more value because of the share price. Correct?
With the short strangle?
With like short, yeah, with like short strangles or short, because when you're shorting, usually you're looking at getting a credit up front, right? But if you
Yes.
get the if you don't manage it correctly, you can get risk of assignment, which then can change your actual max loss because of share price. Correct?
Right. Yeah, you're undefined because even without assignment on top of it, of course, but even without assignment, if you go past your short strike, either call or put, then you're in trouble. And if it's a call, it could be an infinite loss.
Right. And you don't want that, obviously. And again, especially if you're going on the
No.
call side, if you're going against the call side, especially because the call side, you could have unlimited upside because the share price could technically go up to like, millions and
Infinity.
millions in theory, right? So
Yes.
that's like your unlimited like loss that you really have here. So definitely I don't trade butterflies. I know you do butterflies and jade lizards and all those. So you're the one who does that more than I do, but that's why I love asking you to do this. Explain it, not
Yeah.
me.
No problem. That's why I'm here.
All right, so moving on to the third question of the actual trivia. Where are U.S. Treasury yields trending recently? Have you been up to date with recent market news events? Where are U.S. Treasury yields trending recently? Have you been following along with the market, especially with more of the bond market, more specifically, because the bond recently is in like the last like week and a half or so, give or take. Yeah. So, yeah, I know it's worded weirdly in that one, saying trending recently. I should have said, more weekly in this case. But overall, bonds are near multi-year highs because of the uncertainty in the markets and everything else. We have a awful jobs report that came out last week where we had big misses and all that. So as a result of that news happening, bonds went higher, which is where people go into more safe haven plays in the treasury yields and stuff like that. They've gone down probably the last couple days. I don't know if they actually. I think Friday, because usually when the market's down, bonds are up. They usually invert each other, if I'm not mistaken. Right, Ryan? I don't know if you know much about it, but
I think you're somewhat right, just from a perspective of people going away from a safe haven asset or going towards a safe haven asset. Um,
yeah.
but I don't know 100%, to be
Oh
honest
no,
with you.
so bonds were down. Treasuries were down the last like day or so. So Itai is 100% right. They were down the last day or so. But I think I should have been more specific. So I apologize. We always make mistakes as we go here. So Ty, if you lose by 1 point, I'll give you something. Okay, don't worry.
He'll fly to Israel and give you a hug.
Right, I'll fly over to Israel. Oh yeah, I could do that. Yeah, I mean, just take off a whole week of work, right?
Yeah.
So that's definitely a tough one. But hopefully, you guys know that. I'll come to you. Yeah, we'll meet up. We'll meet halfway. All right. Question number 4. Implied volatility is another implied volatility question, courtesy of Ryan, I believe, was this one.
Yes.
This one's actually an interesting one. Because you don't really know, like, do you even know what really implied volatility actually is, right?
I mean, I know what it is, but like,
Well,
yeah,
yeah.
esoterically, I guess I hear what you're saying. There you
Right.
go.
So, implied volatility is mean reverting. Exponential would mean to be just constantly increasing or decreasing. Implied volatility always is fluctuating a lot. Ryan, you don't want to add any more about mean reverting behind that?
Yeah, I mean, I guess random. I could see how someone would pick random on this now that I look at this, but yeah, it's really mean reverting, meaning when it has a tendency to go back to the mean. So if implied volatility is elevated, it's more likely to decrease in the near term, and then if it's suppressed, it's more likely to expand in the near term too, to go
Yeah,
back
and
to
that
the
I think
mean.
also really comes into play in terms of like if you're buying or selling options. Usually people will say like buy options when volatility is low because you're gonna have that kind of expansion and then you're gonna get closer to that mean that you're looking at. And then if you're selling options, sell when options are high because when the implied volatility is high because you get that maximum premium and it tends to revert back down to the mean, right? If I'm not mistaken.
Yes, correct. That is exactly the way you want to go about it.
Yeah, so if you're an option buyer, you want to buy when implied volatility is low. If you're an option seller, you want to sell options when when it is relatively high. So a lot of people like to look at implied volatility and how it compares to historical, options chain. If your implied volatility historically on average is 50%, and right now it's at like 80%, that might be a good time to sell options because you're going to be having that mean reverting back down towards that 50% mark. And then vice versa. If the mean is 50% usually on average and your implied volatility is like 20, usually going to have that expansion at some point go back up towards that 50 mark. So there's kind of like some quick math, I guess, examples there for you. But implied
Before
volatility, definitely important thing to know. And so far, we are
before
seeing. Go ahead, Ryan. You want to add anything else to that?
Well, I want to know with Itai's question saying like a tightrope, too loose and falls, too tight and snaps, needs equilibrium. I guess I don't know what you mean exactly there, Itai.
I think
Is
it's
it
kind of talking about how like it's gonna have a move in either direction, like how they're gonna have those kind of big moves. If it's like kind of think about like you ever used Bollinger Bands before, and like if you ever used like Bollinger Bands for like an option strategy, or looking at like where if you're looking at like where price is trending and Bollinger Bands and stuff like that,
right?
like it's a very common thing in statistics. We talk about Bollinger Bands and standard deviations and all that, where if you're up at that upper Bollinger Band, it tends to revert back towards the middle. And if you're at the lower Bollinger Band, you tend to return back towards that middle still anyways. So it's kind of like that where you get like that, like it needs to balance at some point. So that's I
Yeah,
think what he's talking about. When we talk about equilibrium is that mean return I'm hoping for. I think that's what he's talking about.
yeah. I hear you there. Okay.
Yeah.
Uh,
So but hey, we all learn something new here. Don't worry, every day.
yes, he's in the lead, anyways.
He's in. Yeah, we had Ty. Shut up. You're in the lead. Who cares? It doesn't matter. It doesn't matter. Question 5. What is one main difference between American and European style options? Dude, Ryan, I had to abbreviate stuff on this because
Yeah.
like there's like an actual like character limit for
Sorry,
for answers.
I knew when I put it up there, I was like, oh, this is really long. But I was like, I kind of wanted to put it
Yeah.
up here because it is important to know what's the difference between the two of them.
Mm.
Yeah.
Hannah,
But
as you joined in, if you would like to take part in it, go to Kahoot.it. The game pin is in the bottom. Oh, see, Atai's already got it covered. I love that. Thank you, Atai. He's like a modern day moderator for this chat. It's amazing. Thank you for that. And the correct option we have is European options can only be exercised at expiration. Americans can be exercised any time before that.
yes.
So that is definitely a very good thing to know, especially because if you're selling options, you don't want to have that risk of early assignment. I know I saw somebody on After Hours. I want to say it was Anya, who I think got exercised on Robinhood shares on a
Right.
covered call after hours also. So the exercising is a little bit different for American compared to European. Usually.
I think even Europeans, I think they have like a 20-minute window after hours where someone can choose to exercise or not. And if you're in the money, you're going to be exercised very likely because it is an institution on the other end, very likely, of your contract.
Interesting. Taking a look at the chat here. Hannah, you can still join in. There's still like 16 questions left, so you can still make your way up here. So don't feel you can't. Holy Hector says, aren't Bollinger Bands statistical bands where 90% of the trade's fallen? Yes, 100%. It goes off of 2 standard deviations, which in the statistical world, Holy Hector, it's 95% of your data is usually between 2 standard deviations of the mean. So if you break out past that, tendency more likely to return back towards the mean. So absolutely 100%. So thank you for asking that one. I did, but also have a 4-year-old playing Wildcrat.
Wildcrats.
That's okay. Again, feel free, guys. I don't even know what that is. You know what that is,
It's
Ryan? I don't know what
well,
that is.
did you ever see Zaboomafoo when you were a kid?
Yes.
It's the same people, but they'd have a new show on PBS Kids, and it's the brothers, and I only know about it because my ex-girlfriend had a daughter, and she would watch it. So,
Gotcha.
but it's the Zaboomafoo guys.
Gotcha. The Zaboomafoo guys, love that. Love that. And yeah, all right. So taking a look, we have 15 more questions to go. Plenty of time here. So moving on to the next question. Someone needs to take a tie off the leaderboard here. What is the max number of legs allowed per trade? Now, believe it or not, I also did not know this answer until I saw the answer from Ryan. So
wow, dude.
I did not actually.
Well, no, a lot of people aren't doing spreads here, so.
I feel like the answer makes sense, but again, I just didn't. I'll tell you what I say afterward. I'll tell you my advice afterwards. What my thoughts are. The correct answer is 4. So I thought you could just do as many flipping legs as you want, honestly.
Yeah.
Like, oh yeah, like sell this one, buy this one, like just do whatever. I literally thought there was like no cap on it at all. I wasn't really sure. So do you want to elaborate more as to, do you know why it's 4?
I don't know why it's 4. That's a good question. I honestly, same as you, is like, why can't I do 6? I don't know why they limit to 4. But yeah, I'm sure there's a reason behind it. I'm sure it's an antiquated reason too.
Yeah, because I was sitting there, it's like, yeah, like 4 legs is, like 4 makes sense because, you have the iron condors, like those kind of things. Like those require, 2 sold options, 2 bought options. Like I get that. But like I was like, like why can't I just go on to like the option strategy? And I'm also curious as to why. Yeah, I guess I don't know, honestly. You know what I'm
But
thinking of more of? Um, if I went out to like, bet on like Robinhood to go like really, really parabolic in the next like year, I could just like buy different expiration dates call options. That's not legs. That's just different. That's just different ones. You know what I mean? So maybe that's what I'm
no,
thinking.
you could still only route 4 of those at a time
If I wanted to stack call options on Robinhood, I could only do 4.
in one order. So you could do like 8 separate orders,
Oh,
but in one order you can only have
okay.
4 legs.
Okay, so in theory, I could literally sit there and just be like, I'm gonna do like 14 for Hood if I wanted to, but only if I want to do it all at once. The max I can do in one order on Robinhood is 4.
Yes. So you'd have to do in that case you'd have to do
That
four
okay,
four orders. And
right?
Etai
That
might be
makes more
onto
sense.
something
Okay,
like an animal. Maybe that's why they call it legs. I don't know. I never thought of it that way.
that's 5 legs. Could you imagine
Yeah.
if like Wall Street was just sitting there and was like, guys, 4 legs, animals,
Yeah. There
enough
you
said,
go.
and
Yeah.
that's
There
it.
you go. Yeah.
Absolutely that. Rock, I did not give the answer away. I just said it makes sense. So I said, okay. So I don't know what you're talking about. All right, just saying. See, now we got Train. Train is the one who won last week, believe it or not. Train won the free
I
month last time we did this.
yeah.
So I believe,
Yes.
right?
Yes, you did. But before you
So
click
now,
next, Etai, the answer was 4, my friend.
yeah, what are you talking about? Oh, okay. I think he's messing with us.
Maybe he's just being funny. I don't know. Anyways, yeah, Tran won
Look,
last week.
I have like 2 brain cells left. Okay, don't make me lose any more of those. All right. Let's go to the next one. All right. Next question we got here. So, question number 7. Which leading indicator is often watched to predict future economic downturns? This is a Fridge Financials question. Future economic downturns. Who knows actual economics and not just trading options? Because the more you know about economics, the better you can trade stocks and know what is coming and why. It's actually a tough one. And the correct answer is actually the ISM manufacturing PMI is below 50. Strong GDP growth is good for the economy. Expanding housing, good for the economy. Consumer confidence, good for the economy. Manufacturing PMI below 50 is considered contracting, which means it is doing bad. If you ever see any of those kind of data points, you're looking at anything below 50, it's called contraction. So for manufacturing, for the services, those kind of things are definitely a huge negative impact for the economy. So I think a long time ago when we first started contracting with the PMI, you saw the markets react in a negative way for it as a result. So very, very nice. Option A was too specific, so I chose it. Yeah, I thought that afterwards. I was like, but hey, maybe somebody might not do it otherwise, But so it's again very good to
I didn't
know
know.
that you're looking at. I chose Rock, I swear I'm gonna make the most. I'm gonna do this for next week. Okay, next week when we do this, I'm gonna make sure that everything is too specific, and then it's gonna be the wrong answer. I'm gonna write like a
Yeah.
paragraph. Okay,
I
just
try
for you,
I
and then it's
try
gonna
my
be
best
wrong.
to be aware of that too. So just to let you know, Rock, for my questions, don't go for that.
Right. Moving on to the next one. Question number 8. If WTI crude prices, which is oil, jumps above $100, what is the likely immediate macro effect? This is
I
a Fitch
have
Financial one as well.
Yeah, I don't know any of yours either. So if that makes you feel better about not knowing mine,
It does. Yeah, it
yeah,
does.
I was like, yeah, okay, crude oil jumps up. What does that mean? I gotta spend more on gas. I don't know.
Yep, and that is why inflation goes higher because what happens? You got to spend more on gas, you got to spend more on oil for heating homes and stuff like that. You also got to think about this in terms of from a business perspective. If you are someone who has transportation and you need a lot of vehicles moving out and moving product, they have to pay more in fuel. Paying more in fuel, they got to push that price somewhere else. Usually goes on to products and stuff like that. So everything just gets more expensive. It's just like Train said, exactly. So I don't know if that helps you guys out with that one or not. But moving on to question number 9, because Train said this is easy. Hey man,
Yeah.
we're not trying to make it like impossible, okay?
Yeah. Hey, he told me yesterday,
if
or
if
they
if
told me
I
yesterday, mine were tricky. So who knows?
let me tell you, if I wanted to, I will make one where it's like if you get everyone right, you could probably walk out with a bachelor's in economics if you want. But I'm not doing that here.
Wow.
All right, moving on to the next question. Question number 9. I'm not even halfway through yet. Which consumer trend is being closely monitored for signs of a slowdown? Some of these are obviously really easy, as you know here. Big ticket purchases, grocery spending, vacation bookings, or credit card delinquencies. Which one is being monitored for signs of a slowdown? Do you know the answer? Probably. I would hope you guys might. I don't know. Dude, hey, Fridge Financial's video did the whole thing about it.
I
See, not everybody got this
know.
one right.
No, you're right.
Not
I
everyone
don't
got
know
this
if
one
I
right,
would
which
know.
is actually interesting.
I mean,
Yeah.
most of the answers like make
credit card
sense.
delinquencies. Right.
But go ahead.
A
You
lot of them
explain.
do. A lot of them do. Yeah, no, a lot of them really do. But a signing of a slowdown, credit card delinquencies means that you're not be able to pay your credit cards. If you can't pay your credit cards, like, and you're maxing out to try to afford just to make the bills be paid somehow, like that's where the big problem comes into play.
Yeah.
Grocery spending is always going to be higher over time because you have inflation historically is 2.5%. So your spending is always going to have that kind of like uptrend and downtrend kind of thing. Big ticket purchases, not really as much. For the wealthy, sure, but a lot of us don't have big ticket purchases as much, so it doesn't really focus as much. And then vacation ones, again, not really. Again, being closely monitored is the key words here, right?
Yeah.
So monitoring it is definitely, they probably monitor all of these, but the biggest one is delinquencies, because if people start having delinquencies on their credit cards, they can't even afford to make the minimums on their credit cards. That's where the big problem happens here.
Right.
So
and
that's kind of where we're looking at. And again, I think we saw that credit card. Yeah, go ahead, Ryan.
No, you finish.
You finish. Add to it. Let me hear it.
You finish.
I was gonna say that there's a lot of data that came out recently that talked about credit card delinquencies are getting pretty high again right now, so people are getting a little worried about that as a result of it. But anyways, what were you gonna say?
I was gonna say the other 3 kind of flow into credit card delinquencies because you're probably gonna put them on a credit card anyways. So then it doesn't really matter if those purchases go down or up because they could be going up, but you're not paying your credit card.
Right. And it's one of those things you think about, credit card delinquencies. If you can't pay your credit cards, what if you have a mortgage? Okay, now you can't pay your mortgage. Okay, that's showing a really big downturn. It could snowball that way also. If you can't pay your credit card, then are you gonna be able to pay your mortgage? So,
Right.
It's one of those things where the delinquencies, the defaulting, that kind of stuff can lead to some big problems here, more or less.
True.
So we shall see. But moving on, we are now halfway through, and anything is possible. The leaderboards are changing. I can get rid of people if you want. Did you know that? I can X out like Jackson right now. I can get rid of Ty right now if I want to. And just be like, oh no, he's gone.
Yep. Whoops.
He
Sorry.
didn't win. That's crazy. Oh, my hand slipped.
Yeah,
I don't know
exactly.
what happened.
I slipped.
Question number 10. An iron condor consists of what 2 spreads? Look at that. We just talked about the iron condor recently. So do you know what the iron condor consists of?
Luckily, I did not give the answer away earlier.
Right. Well, if they follow your trades, then they will probably know the answer because you probably gave it away when you do your iron condors and everything else, right? So
that's probably true. I don't do a ton of condors, but I do them sometimes. So you're right.
Right. And the correct answer is short call spread and short put spread. Ryan, do you have anything you want to add to this answer as to how it works with the iron condors?
No, I mean, it's, a short call spread is going to be a bearish strategy. A short put spread is going to be a bullish strategy. So you combine them and it is a neutral strategy.
Yeah, and basically what the idea behind the iron condor is, if you're not familiar, is you're basically just banking on it to stay between 2 set prices of strike prices for however long you want to go for. So if Google's trading at $200 a share, you think it's going to be between 180 and 220 by expiration, your iron condor will be set up around those strike prices there. So it's basically, like you said, a neutral strategy, basically banking that the stock will not really have much movement, and as time goes on, you'll be able to get more premium because if you're short, then you get more premium, but you can also buy,
you can do it long.
Well, I believe
you can do it long iron condor.
Yes.
But so I should have said a short iron condor consists of But you can
That's all right.
skew an iron condor to make it a little more bullish or a little more bearish if you want to, but still you're pinning between two short strikes if it's a short.
Right. Absolutely. And we got Hannah, who has joined in, and she's got an answer streak of 3. Way to go, Hannah. Thank you for participating. And if you were able to join late, I appreciate that. We all do. Moving on to question 11. Which sector has seen the largest layoffs recently? Jobs data came out last week. It was awful. Who's got a lot more layoffs recently? I think the answer is missing. Ty, what do you think the answer is? A tie that's not here then, huh? Go ahead, tell me. You tell me.
Manufacturing.
Yeah. Okay. I mean, yeah. I mean, I would be curious to see what the manufacturing layoffs look like. Honestly, I haven't really looked much into manufacturing as much. But I know tech has been really, really bad recently with layoffs, and I know like a lot of these companies have stalled on even hiring in tech. I know Intel is laying off like 15% of their workforce. Minus 80,000 jobs since March for manufacturing. How much is tech? Someone can Google that. Please Google it for me. How much is tech laid off recently? Compared to 80,000 jobs. I think tech is bad though, because Intel is laying off like 15% of their workforce. I don't know what 15% of their workforce is, but it's a lot, I'm sure.
It doesn't help that layoffs are making stock prices go up. So, I think you're going to be quicker to lay off to help them too.
Yeah, how wild is that? That usually when you announce you're cutting the labor force, everyone's like, "Oh, bullish! Oh, you guys are awesome!" It's like, "Oh, okay, sure."
Yeah, right.
Like just preying on the downfall of people losing their jobs. I love that for us.
I mean, lowers your costs. I get it.
Yep.
You're going to have more in your margin, but yeah, exactly. It's not like a positive thing overall.
Right, 19,000 from Microsoft, Google, 35% management, Salesforce, etc. Yeah, we have Salesforce laid off like 3,500. You had I know Intel wants to cut their workforce down. A lot of them just aren't doing it. They don't see it. And again, it's bullish for the stock because it's less cost, but at what cost of people not working? Really interesting.
Yes.
Moving on up into the next question. Wow, it's getting close here for a couple of them. But again, I can just delete somebody if you want me to, and I'll just we'll make it closer if you want.
Pay us, then we'll
moving on to the next one. Question 12. Why is gold trading near record highs? Strong corporate earnings, confidence in the dollar, market uncertainty and Fed expectations, and falling inflation. This one's actually not, I don't think it's too bad of an answer, really, per se, but let's see how you do. My printer just sent me software updates. I don't want to update that. I'm doing trivia. What are we doing here? And the correct answer is market uncertainty. Usually people always flood to gold because gold was the standard of currencies it was what was used many, many years ago before the dollar. So usually when there's market uncertainty, people go to gold as a asset. The original VIX. Yep, exactly, Hannah, just like you're saying. But yeah, absolutely wild. Hopefully the money printer doesn't stop malfunctioning. Yep. Safety asset, absolutely safe haven asset, however you want to call it. Everybody flocks to gold. So we see gold usually going pretty high. Usually it's an indication of like people are freaking out. They want to put their money into gold. And also gold is a physical commodity that you can hold on to and it holds value more compared to the dollar and stuff like that. So very, very nice. And we're looking at train is bad. So again, you do get points. If you didn't notice, you do get points on speed as well, not just accuracy. So you got to answer quick and right to get the points. Yep. Just so you know. So you got to be fast.
But I answered quick.
Ty, you got to answer faster.
Apparently.
Train is cheating. Hey, we got question 13. Which part of the yield curve is most inverted right now, signaling a potential recession risk? I've brought this up in my videos multiple times. So I don't know if you know the answer or not. If you're watching Fridge Financials, you should know the answer to this one. If you're not, I don't know what to tell you because my content's free. So is Ryan's, of course.
Yes. But I don't have as many videos as you.
That's true. The correct answer is the 10-year versus the 2-year spread. And when that inverts, that's the one that's usually a big indication of a recession. If you look back at historical data, usually recessionary periods happen when there's a big invert between the 2-year and the 10-year spread, which obviously is a big problem. Basically, the idea behind it is that when the 2-year is higher than the 10-year, People are going to want to put more money into the 2-year to get those higher rates locked in compared to the 10-year. Usually, if you think about how this works, Fridge, you like putting your answers? No, I shuffled this, Rock. Okay, so if I shuffled this and they're all in the top left, you shut your mouth. Okay, that's not my fault. I promise. When I was making these, they were not all in the top left. God. How about you just know the answer instead of just trying to figure out what I'm doing for my answers, all right? How about you just learn the answers, all right, Rock? Let's do that. But on a serious note, on the educational note here, before I start attacking more people in the chat here, so if the 2-year is a lot higher than the 10-year, usually if you want to put your money into a 10-year bond, and Ryan, hopefully this makes sense, because I don't know if you're familiar with the 2-year versus 10-year or not. I have no idea, but so if you want to put your money into the 10-year, you're locking your money away for 10 years, right?
Right.
So if you're locking your money in for 2 years versus 10 years, one of them should have a higher yield. Usually, which one should have the higher yield? The 2-year or the 10-year, usually, if you're locking up for longer.
If I'm locking it up for longer, I'm going to guess
Ryan?
I have more money for the 10-year, else you're not going to want to pick the 10-year time frame. If it's a lower yield, there'd be no point. So that'd be my guess.
Exactly. So when the 2-year and the 10-year invert, it's a big problem for that reason, because of the 2-year versus 10-year spread. If your 2-year yield is higher than the 10-year, why would you want to go to the 10-year? Just go to the 2-year instead. And that's kind of like that big fear. But some people are saying also in the chat, 10 versus 30-year. I have heard that, but the more common one I will say is the 2-year and the 10-year one, from what I've read over articles in the years past. People really like to look at the 2-year versus the 10-year. But definitely could be the 10-year versus 30-year. You know what, guys? Make your own trivia questions, okay? All right. Like, I'm going off of what I know, okay?
Hey, no one's critiquing mine. That's all I got to say. All right.
This is stupid, man.
That was a joke.
Right.
That was a joke. No,
I gotta stop doing this.
You're
I
good.
know.
You're good.
Something 9 versus 21. Is it? I don't think that's a yield. I don't think that's a yield. 9-year versus the 21-year, but maybe it is. I don't know. And again, I think the problem also with these things, these kind of questions, is that some of them are up for debate in terms of how the markets are running. Usually the more common one is the 2-year versus 10-year one. 10-year versus 30-year is definitely another big one as well, for sure. There's a lot of different things you can look at. So maybe I got to keep that in mind for next week, guys. Okay. Let's do this question first. What key report is the market watching this week that could influence Fed policy? This week coming up, like this week, like not just last week, this week coming up.
Like September 8th.
Monday through Friday. Thank you. Yeah. I don't know what the dates are. The 8th to the 12th, whatever it is.
Yes, you're correct.
Let's see who's following the economic calendar.
I always know Friday.
It's actually CPI. Yeah, CPI is coming out this week. I believe it's Thursday, and PPI is Wednesday as well, I believe, if I'm not mistaken on that one. So make sure you are paying attention to the calendars, because CPI is a huge factor of measuring inflation to see where everything is going on there as a result. CPI has the bigger impact of the Fed policy.
And when is CPI
Yeah, it's where
coming
everyone
out?
is anticipating rate. I believe Thursday. I believe it's Thursday pre-market, and then I believe PPI is Wednesday.
Nice. Might do.
Yeah. So even I don't know if retail. Can anybody tell me if retail is this week? I don't know if retail is, but even if retail was this week, CPI is way more important than retail sales.
It's not a key report. That's the key word there, is key, right?
Yeah. Yeah, retail sales are good to know for sure, but it's the consumer price. It's the consumers that are looking at more or less, and just overall, not just the sales in the retail and the retail department, but more of just how the consumer spending overall is definitely the bigger impact for things.
And then before you go on, Fridge, what Holy Hexer was saying with the 9 versus 21, he was saying it's pi versus the golden ratio. Do you have any idea what that means for the yields? Because I have no idea what that means. I mean, I know what pi is.
Look, I know what pi. Wait, I mean, if you do pi divided by the golden ratio, I don't know what that math becomes. 3.14 divided by 1.618 gives you 1.94. I don't know what he's. I don't know. I have no idea.
He said he was kidding.
Connection there.
Hey, sorry, Holy Hexer. The joke was over my head. I have no idea. I just know pi is 3.14 to whatever, and golden ratio. I don't know what that means.
Golden ratio is a thing in math that we talk about all the time, where it's like 1.618. It's very common and it's very useful in if you ever do Fib retracements. Do you ever do like have you ever done anything with Fibonacci retracement levels and stuff?
No, I know what it is, but no.
So yeah, so Fibonacci retracement has a bunch of levels, and one of the levels that a lot of people like to look for is the 0.618 retracement level, which comes from the golden ratio of 1.618, which the golden ratio is like more commonly used, I believe it or not, in a lot of things in the real world. Like there's a lot of, I think it's like seashells have like a pattern that follows the golden ratio or something like that. It's really interesting, actually.
Yeah, I know Fibonacci's like goes everywhere, right? It's like everything. You're right. I think
Yeah.
seashells have it. Yeah,
It's like that kind of stuff. Yeah, so it's really cool, actually. So very, very interesting on that one. Someone said that you have prelim U of M consumer sentiment. That's what
No
Holy
idea.
Hexer was saying. Consumer sentiment definitely makes a huge difference, knowing what the consumer talks about here. But CPI is like the numbers people look for a lot. Usually, like the most. Go ahead.
No, you go. You go.
I was gonna say like the one that the Fed usually watches first is PCE is first. PCE is number one that the Fed prefer to watch. Then under that, it's like CPI and the jobs and stuff like that. Like in terms of inflationary pressures, though, you're looking at CPI, PPI, PCE. Non-farm payrolls focuses more on the labor market, which is different compared to inflation, stuff like that. But CPI is one of the big hitter ones.
Nice.
So what were you gonna say?
Oh, I was just gonna say
Ryan?
they were asking what it is.
Oh yeah. So yeah, very, very interesting stuff. Powerball is 1.8 billion. Man, I would love to hit that.
Hey,
Yep. Can you get extra points, Willie Hexer? Sure.
Speaking of which, if you download Jack Pocket, which is a DraftKings lottery, you can get like $5 free for the Powerball. I did it last night. So hey, you know what? A couple free tickets. But they have a new promo
Ryan,
bonus.
do you get a referral link in there, Ryan? You want to put in here?
No, I don't. I just am saying, hey, if you guys want to get them for 1.8 billion for free, might as well. Jack Pocket, like jackpot, but Jack Pocket. It's a DraftKings lottery app. I just found out about it last night. They give you $5 free
through DraftKings?
It is a DraftKings owned app. So you like log in with your DraftKings and my like free money that I have from DraftKings from sports betting and daily fantasies in there to use if I wanted to.
Huh. Bullish on DraftKings, guys. Let me tell you.
Hey, I own some shares. I figured it out last night. I don't know why. I got some notification from something that was like, "Oh, DraftKings." Oh, I think it was Robinhood Snacks. They were talking about it, how the Powerball's up, and so it's helpful for DraftKings because it just came out with this app.
Interesting. I wonder how much of a share that Jack Pocket gets out of that.
That's a good question.
Like, do they get like any sort of like commission from like ticket sales or from the Powerball or something like that? It'd be interesting to see, but very interesting stuff. Good to know. Moving on, we got question 15. How can a trader avoid triggering the pattern day trader rule?
This one should be probably pretty easy.
And this one's also up for discussion right now, I believe, right? And
one of these options is up for discussion here. Potentially.
Yes. All the above.
It's all the above. That's correct. How is that confusing, everyone?
Yeah. What?
Okay.
Yeah, I mean, so the one that's up for debate right now is the 25K one. That one is up for debate, but you can also use cash instead of margin because using cash, it's only your amount only. So you can trade it how many times you want because it's just your cash and your cash only. I didn't know about trading futures and forex though, Ryan. I don't know if you knew that one. I did not know that one actually.
Yes, I do know that. So like how we were talking about the overnight drift, but if you day trade like ES options, you avoid the PDT rule because you're using futures on options on futures, and they don't count as like SPX or SPY or QQQ.
Interesting. And Hannah says, "Can day trade cash not settled?" Yeah, I mean, I would have guessed that because if your cash isn't settled, like what happens if like they have to pull the funds back out and be like, you can't afford to put this money in there, then obviously it has to be settled first. That makes a lot of sense for sure, but. Yeah, everybody always says, if you want to trade as many times as you want, just go to cash account only and not use margin. It's a lot easier that way, I feel like.
Yeah, and
Oh my goodness.
and to Hannah saying, hey, you could trade 3 and 5 day window. When I selected this, I couldn't do 5 options. I was going to have 4 and then all of the above as a fifth one, and have one of the options be 3 and a 5 day, 3 trades and 5 day rolling. But we couldn't have 5 answers on here, so I decided to remove that one because.
Yeah, you can.
Go ahead.
Yeah, go ahead.
I just decided
Sorry, I cut you off. You go
to
ahead.
remove that one because I wanted to add the futures or forex one because I thought that was kind of good information for people to learn about.
Yeah, I definitely didn't even know that. And also, like, I can't have 5 answers here, but I got to pay for the premium, and your boy's not paying for that. So no,
Yeah,
thank you.
we're not paying for that. No way.
You guys get 4.
Yeah,
you guys get 4. All right, you get 4 answers, and that's it. Okay?
I'm not paying for anything.
All right, moving on to the next. Oh, it's getting close again. That's nice.
Except Tran's still.
Tie and train.
Tran's gonna have to
Yeah.
Tran's just gonna get a free lifetime at this rate. Just
right. Like, all right, moving on to the next one here. So 16. How many U.S. jobs cuts were announced in August? I bet you don't know this one, guys.
I don't know.
Oh, but you make them so easy, Fridge.
Yeah.
Put a number in there now. And you know what it is also? Is that I'll tell you my thought after this, okay? I thought of this one actually. It's 7. Yep, you got it. It's high. 7 people were cut.
7 jobs. Yeah.
86,000. So what I was gonna say was that when I was looking at the answers the first time, and I ChatGPT'd the answers to this one. So yes, I did ChatGPT these answers. It gave me 10,000, 50,000, 200, and then 86. So Rock would have been like, oh, that's the only one that's specific. So I'm going with 86,000. The other ones are like random numbers. So I made sure to change all the numbers so they're all randomly specific numbers. I thought ahead for this one. All right.
Yeah, I have.
Be impressed.
I have that sometimes where I like create the question and then I know the right answer and I don't know how to create fake answers. I'll have it create it for me, and then there's sometimes where it's like, okay, well, it's really obvious which one's the right answer here. So then I have to still go ahead and play with it.
Yeah. Yeah, that'd be like, what are the answers? 10,000, 40,000, 100,000, 2,346.
Yeah, right.
Probably that. Probably that one. Oh man. Oh, it's close.
It's close.
Ooh. Oh, do Rangers? Yeah, this is our second week doing a Holy Extra. We are always improving every single week here. Last week I picked the wrong answer for one of them. If you were here last week, you saw the video of that one. I had one of my questions that was the wrong answer. So definitely could do like maybe Rangers in the future. Not a bad idea as well. So I appreciate that recommendation from you. All right. Moving on to questions. I can't. This is taking so much longer because chat is hysterical and it's so funny. I can't keep going through these.
It's good. Hey, it's better than us. It's good that we engaging. Having a good time Saturday morning, casual.
Oh yeah, dude. Otherwise, I'd be like, all right, guys, here's the next question. Like it's not as fun.
No.
All right, moving on. Question 17. What does a high put call ratio indicate about investor sentiment?
Puts divided by calls.
Do you know the answer? Puts divided by calls. A put call ratio. What does that mean?
I would have worded this differently because I read it and then saw the answer and then I was like, oh, okay. I would have used this word and that's why I just didn't. No, I'm not critiquing you. I'm just saying for how I think about it.
That's okay. So how did you think about it? Tell me, what did you think?
I would have called it high put skew is all I would have said, but it's the same thing.
Okay. Yeah. High put skew. Good Lord, man. Dude, I wouldn't even use that word. I'm a math teacher.
Well, hey,
because you know what it is though? If you go on to Webull has like put call ratio as like actually like an indicator. Like it's like on there. And if you go to the options chain, it says like put call ratio on there. So that's why I was like, oh, I'll go with that one instead.
Okay.
Oh, Interactive Brokers does it too. So that's good to know.
Tasty Shade does not do it, but we talk about it. Go ahead.
No, I was gonna say, so if you have a high put call ratio, if you guys weren't familiar with high put call ratio, basically this means that you have a lot more puts than calls. That's why the ratio is higher. which means that you have a more bearish sentiment because puts mean you're bearish on the stock itself. Holy Hector says, Ryan, why do you prefer skew over ratio?
I just it's not a matter of preferring. It's just the way I know it is skew is what this all it is. It's the same thing though.
I mean, it makes sense because you think about, like when you think about like skew, like it's on more one side than the other side. So that means you have a lot more puts on one side compared to the calls on the other side. If you look at like a chart, right? If you look at like the volume of options, and there's a lot more puts on it's a lot more volume on the put side compared to the call side, then it's skewed towards the put. So I get it.
So we might be talking about two different things though. So you're saying when you say high put call ratio, you're talking about volume and open interest. That's it.
Yeah, volume and open interest because you're looking at again, you've got a lot more put option. If you have a lot more puts compared to calls, then yeah, you have a higher ratio.
We might be talking about two different things. I don't know if skew play, but skew would be like I pick an equidistant put and it's got a higher premium than an equidistant call strike. That's
yeah, no, I'm talking about volume. I'm talking about volume and open interest.
Gotcha. I mean, it might kind of play into it.
That's where Webull pulls their info from.
Gotcha.
Yeah. Easy indication to glance at. It is a good one because a lot of people look at it that way. It doesn't matter if it's buying or selling puts.
I don't believe
so. In terms of, I don't know. Yeah, I don't believe so. I haven't really thought of it that way, honestly. But it's a good question to ask. If I find out more, Holy Hexer, I will let you know. Don't worry. It needs a lot higher volume for puts compared to open interest compared to calls on top of that. Yeah, but I think I'm buying that as So it's definitely something to keep in mind about. Again, Webull has it. If you go into like the options chain and stuff like that, you can see like the put call ratio. And usually people have done it as more of just like look at the put. They'll say look at all the put volume compared to the call volume. Oh, people are more bearish on it. But then people made the other argument where they're saying if there's so many people on puts, the market won't want to pay the people with puts, so they'll push the stocks higher. You know what I mean? Like, I don't know. Like, some people look at it that way too. As like, let's go against the grain, not for it. So I don't know. It's interesting. It's like that's probably market psychology more or less. I feel like than actual like what it actually means.
Yeah, it's definitely more of people see risk to the downside. It's not that anything's gonna go down. It's just people are seeing risk to the downside.
Right. Yeah. Oh wow. So Ty took back over into first place. We've got 3 questions left.
Good article from Itai there if anyone wants to read more on put call ratio.
Good to know. And Hannah's climbed up into 4th place, and Hannah's doing a bunch of different things right now, and she's still answering these questions. StratCat's moving up, Hannah's moving up, Holy Hexer is doing great things. So thank you guys all for participating in these before we are wrapping up here. Question 18: yes. Which of the following is the ticker for gold futures?
This is probably pretty easy for most people, but you know what? Decide to throw.
I don't trade futures. I actually don't know. I don't know this one actually. I don't trade futures. I was just like, there's a bunch of letters here. I know the only one I know that it's not. I know one of the answers that it's not already. I know that one.
Well, I threw it in there intentionally.
Yeah. The ES one is the one that I didn't. That I knew. I know ES is not gold. I knew that one.
I got you. How did Hannah? How did you get that one wrong? Because you trade gold futures. I guess she does MGC maybe, but yeah, GC's the micro.
Well, Hannah's multitasking. Maybe it's a quick sleep with a button. Who knows?
That's true.
Yeah. See, look. A little bit of multitasking going on over there. That's okay.
Gotcha.
What's up with the leaderboard? We got 2 questions left.
Yep.
Oh, Rock climbed up into 5th. Look at you, Rock.
And a swing, Holy Hexor, if I'm understanding your question there. But yes, let's do it.
All right, question 19 out of 20. Which option has the highest amount of extrinsic value?
That might be a little tricky.
This one I honestly didn't know much about. So I'm gonna have you elaborate on this one afterwards. Because I don't know this one much.
Holy Hexor, by the way, that is a Wild Kratts PBS Kids game, I believe, or something like that. Yes.
All right, Ryan, take it away. Why is it at the money put?
Yes, so it's at the money put because, and it should be really like an at the money, but it's out of the money put because, well, it doesn't matter. Anyways, it's not going to be an in the money call or put because there's intrinsic value is very high in that. The reason it's not the far out of the money call is that because if it's far out of the money, the premium is going to be lower, which should be lower than the extrinsic value of the at the money put.
Right.
So that is why the answer is at the money put.
So then why not the deep in the money ones then? Is it because their premium's so high up there that like there's not really much value there still then?
Well, if it's like $100 stock and let's just say you're buying a leap that at a 90 strike that's worth $12, well, it's going to have $10 of intrinsic value and only $2 of extrinsic value.
Gotcha.
Whereas like if it's let's say $100 stock and you're buying $101 buying $101, no, excuse me, a $99 put, then it's going to be all extrinsic value.
Right,
It's
because
out of
already
the
at
money.
the strike price basically.
And it's out of the money.
Yeah,
Yeah.
I gotcha. Right, makes sense. Rock says at work and having delayed reconnection time, so I get like 4 seconds to read the answers. Crazy, I'm in fifth.
Sure.
Brock's playing trivia in the Kingdom Discord while he's at work is crazy.
Yes. To be fair, Rock, you might be 5 out of 5, just to let you know, because I don't know how many people are playing. Oh, I guess Hannah's in here too, so never mind. You might be 5 out of 6.
Yeah, I mean, 5. Let him feel better, right? Let him feel like he's 5 out of like 20 or something.
Sorry, my bad.
Instead of 5 out of 5.
All right.
It's all right. Last one. All right, so we're
Last
looking at
one.
So we've got a tie versus Train.
Mostly
for
that.
the win.
Everyone should still.
And then I can just delete both of them if you want and put a Holy Hexer if you want. I don't care.
There we go. Yeah, there we go. Well, Holy Hexer subscribes to me,
Last
so it's an easy
question.
fix. Go ahead.
Right. Which of these tickers does not represent the S&P 500?
Tell me you knew this one. Fridge.
He said, "I win." I knew this one. Yeah, NQ. I knew that one.
Okay, that one was pretty
100%.
easy.
That's all, I didn't want to say too much. I didn't want to say too much about ES because I knew that was a question later on, so I didn't want to say too much about it. But
Gotcha.
That's why I knew the ES was part of S&P 500, and because ES is futures, right? SPY and SPX. SPY is the ETF. SPX is the actual
index.
ES is futures.
Yep.
Got it. And then NQ is the NASDAQ, right? Futures.
That is correct. Yes.
Whew, sign me up for the trivia next week, guys. No, I'm just kidding. I host these. I don't actually do them. So rounding up the top placements, in third place with 7,000 points, we have StratCat. Congratulations on third place finish. Absolutely amazing. Second place, Train with 11,000. And in first place with 12,000 points is Jackson AI, a tie. Congratulations. Why do you guys have pancakes on your head? What is wrong with you guys? You guys are weird. Then we have Holy Hexer. And oh, wow, we had a lot of people.
Yeah, we had
8 people here.
Oh, yeah. Okay.
And that is what's up, because we will always be here next week. Hannah says, next week I'll come on time and I won't play 2 games at once while being hazed. Yeah,
that's a good idea.
That's totally fine.
That might help you out.
So that is finance trivia. We have your whole list. You guys should have like one round in a month where the roles are reversed. Oh, so it's like me and Ryan versus like versus each other. Oh my god, that'd be wild. Ryan, would you be up for that?
I would try it. Yeah, I don't know how good I'd do, but I would try it.
Okay, so I don't know how that would have to be more of like somebody would have to host in the trading thing here, and then me and you just be regular people. I feel like.
Yeah, or maybe. We could still be on stage and maybe someone joins us to read the questions to us or something.
Yeah, someone says 2 of the audience should host the show and you guys should be in the audience. That would be funny, actually.
That might be a way to switch it, like winner hosts, and we wait like 2 weeks or something.
Yeah, we can definitely. So you guys can let us know. Obviously, any kind of feedback. Let us know. Obviously, about what would be a fun thing. That would be a really, really fun thing to do.
I mean,
I would enjoy that.
And everyone could submit questions, 20 like from the group.
Mm-hmm.
But yeah, I mean, we have 2 winners already.
You guys read the answers. Yeah, we do. Brock, next week we can definitely read the answers off to you. I know some people like to think without hearing a bunch of other sounds. So I don't really like to read them much, but especially for next week, I could definitely read the questions off and read the answers out for you. If you have spotty connections, I could definitely do that for you.
It's just hard with so little time.
Yeah, I know it's only 20 seconds, and the reason why it's only 20 seconds is because I don't want people being able to like chat GPT their way through it, trying to figure out the answers. Like, it's not really gonna be fun as much if you just be like, "Oh, you have a minute to answer the question." You just pull up ChatGPT and ask the question and get an answer from it. So that's why we kind of do like 20 seconds or so for it. Um, so, but Rock, we can definitely try it out. If you are willing to stay tuned next week, I can talk a little fast and get through them. I don't mind. So that's why we kind of do it that way. Is the timing for things that one. Anybody else have any other feedback for us before we're done here? If someone does that, it's cheating. It will be hell for them when they win and they have to host next. Yeah, dude, the hosting would be so funny because like, they just wouldn't know the answers, and it's just me and Ryan just trying to get these things.
Yeah.
I think that would be really funny. So just so we can finish up the recording part and we can still stay around for the comments. So if you guys have made it this far in the YouTube video, thank you guys so much for watching. And Ryan, as always, thank you for hosting this as we go. Again, we're still going to be around in the Discord after the recording is done. Just make sure we get all taken care of for us. If you are watching on YouTube, feel free to join the Kingdom Discord and be a part of these every single week. They're a lot of fun. And Ryan, anything else for the YouTube people before we talk to the people in Discord still?
No, just I hope you enjoyed the trivia, and I do have a free trial to the kingdom if you want to join. So through my WAP.
Amazing. Love to hear that as well. So for people on YouTube, thank you guys so much for watching. We're going to catch you guys next time, and I hope you guys enjoy the content.